Hi everyone, let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the medium time frame bearish scenario, where we are looking for an expanding flat in a wave A, B and then a wave C to the downside, where the most common target area for wave C is between 23.4k and 22.1k. This means that in wave B, we are then looking for an expanding flat in a wave A, B, and then a wave C to the upside, which then also is a 5-wave structure, as this wave C also then is a 5-wave structure, where you can see that this wave 4 is incredibly long. Now that is the reason why this scenario has lower probabilities, because this wave 4 is 11 times longer in time than this wave 2 and 4 times longer in time compared to this wave 3, which is incredibly long and therefore lowers the probabilities at the moment. In a more bullish scenario, we are looking for a continuation to the upside after at least one more low to be made. The 382 and the 0.5 are interesting targets, mainly also because of the additional support areas that we have around those levels. Around the 382, which is around 29k, we have a blue box, as well as around the 0.5, which is 28k, we also have an extra support area, as you can see. What is interesting though is that if this is the impulse to the upside in a wave 1 or A, and the correction starts over here in an ABC or a WXY, basically meaning that in a WXY this is going to be a 3-wave structure, while in this being a wave C you expect a 5-wave structure. The move is very long, so the corrective structure compared to the impulse is very long in time. It's probably going to be around a 4 or 5-fib time, which is quite unusual for a very long correction and might fit better with a wave B compared to a wave 2. If we go to the low time frame scenario, then over here this is the more bullish scenario, where we still expect a move to the upside and then an ABC zigzag, where we're looking for a 5-3-5. In this particular scenario, we are then looking at this move to be an A, looking for a B down and then a wave C to the upside. The most common target area for B is between the 1.236 and the 1.38, currently sitting between 29.1k and 29.3k, but there's not much additional support around this level. We do have a low over here, but this low is actually just above this most common target area of B, and we have the more like supportive area right below the area for B. So this at the moment is a bit of an alternative scenario, but it is at least good to keep in mind, because the 382 over here is a fib time, comparing the time it took to develop wave A with the time it took to develop either this wave B, or this can also be a wave 1, 2 and then continuation down, by the way. But because this high is made before the 382, which is quite unusual, it's very short in time to have such a short correction, I do at least want to have a bullish scenario on my chart, where of course price from this low over here could also move to the upside if this move down is a wave C, but more about that in a second. What is important though is how price moves to the upside with volume or not. So if we take the low and we have an impulsive move to the upside, be aware that this might be a wave C and then a 3-3 and then a 5-wave move, because a wave C needs to be an impulsive structure. And if price would move up directly, we do have a resistance area over here, which is the blue box that you see between 30.1k and 30.2k, and then the reaction over here is going to be very important for either continuation or not. In a more bearish scenario, the high that price has made over here is the high of a wave 2 or wave B, hitting the 382 nicely, which is a fib taken from the high to the low of wave 1 or A, and we expect continuation to the downside, where the target area for wave C is over here, sitting between 28.1k and 27.5k, and the 1.618 at 26.6k is a minimum target usually for a wave 3, in case this goes down very impulsively. If we look at the move at the moment, that means that this is very likely to be a second wave 1 and then a wave 1, 2, 1, 2. Now what I usually like to see with 1, 2, 1, 2s is this to be a 1, 2 and then the second wave 1 taking the high of then the first wave 1. But as you can see, this second wave 1 didn't take the low of the first wave 1. So that is at least something to keep in mind if this is a potential second wave 1 for then a second 2 and then continuation to the downside in a second wave 3. So yeah, that is again something to at least keep in mind, and then we expect a move to the downside impulsively and then a wave 3 of a wave 3. meaning that the support area over here is not going to offer much support at all, and likely we're just going to dump through that level over here. If we go to the micro, then in the micro the discussion is this a move to the downside a wave 1, a C, or a wave A? Because the moment you see an impulsive structure after a corrective move, you always have to think about this. We can never expect 100% that price is just going to dump in a, like this being a wave 1, 2, and then a big dump continuation. We always have to think, could this be a wave C? Because if this is a wave C, you expect a move back towards the upside, right? Now, in this particular scenario, a wave A for me is a very low probability, this move to the downside in a wave A, because we had a big impulse to the downside here. So you would then expect this, if we are talking about ABCs, you expect this to be a wave A in a 5-wave structure, potentially a wave B, and then you expect a wave C, and a wave C is a 5-wave move and not an ABC, right? It's not a 3-wave move. So wave A for me goes away, and then we have C or 1. Now, if this is a wave C over here, then we're talking about an expanding flat, where then this is a wave A, B, and then we have a wave C, meaning that this structure over here is then part of a bigger 3-wave, in this being an ABC or a WXY. This is still possible. It is not as nice compared to this being a wave 1. So if this is a WX and then a wave Y, then the target area for Y is actually just below the double top that you see on the chart. So if I do this, get the target area for wave Y, then you can see the 1.236 is a target also for a wave Y between the 1 and the 1.236, and you can see it's just below the double top. And that double top, right, that's interesting, that's intriguing me as well, because double tops can be really magnets for price. So wicking above and closing below and then moving to the downside is definitely something I have in mind in case price would move towards the upside, and this being a wave C. Now, what is important for this potentially being a wave C is looking at what the CVD is doing locally and the volume. At the moment, volume over here is very low. Price is moving to the upside, volume moving to the downside. That of course is not very bullish. And we have some resistance over here, as mentioned, around 30.1k. And if this gets passed, we actually have the order block over here just above at 30.2k. So there's a little bit of resistance over here. And if price would move towards the upside, please keep an eye on the volume and CVD. If volume starts to kick in and we see some bullish CVD divergences over here as well as at resistance, keep an eye on a move towards the upside to take that double top, because there is still some liquidity resting above a double top for sure. Also, if you do see bearish signs, of course, you can think about a potential short scenario already here or already here, but you need to follow your plan, your strategy, and your entry requirements. What we do have at the chart as well is vertical lines, fib time, comparing the time it took of this move to the downside compared to the time it currently takes of this move to the upside. And currently the high over here has been made around the 1-to-1, which is nice for an impulse and a corrective structure. Between the 1 and the 1.618 is nice in general. I still I accept if price would take a little bit longer, but I don't want to see this range continuing for like the whole day. Basically, that makes it more bullish instead of bearish, because in the more bearish scenario where this is a wave 1, you want to see a wave 2, and then you want to see quick continuation to the downside. You don't want to see a range that's going to take forever, like we've basically had over here, for example. Now, if we look at these CVD divergences, then what is important is over here we had some clear signs that price was moving to the downside. Once we got below the point of control of this volume profile, price started to create a bearish CVD divergences on the 3-minute over here, and price moved to the downside. Again, also over here, price creating bearish CVD divergences locally. If I go to the 5-minute, then you can see over here we have a lower high on price, but on blue, check the blue line, higher high on the CVD. So lower high price, higher high on the CVD, bearish CVD divergences. So this might then be the high of this being a wave 1, 2, and then a wave 3. And as mentioned just now, time-wise, it would be nice for the high of this wave 2, potential wave 2, to be made over here, right? That's a nice area time-wise for a continuation to the downside. So we have to wait and see what price is going to do. At the moment, if we zoom out, we could argue there's some bullish CVD divergences as well over here, higher low in price, and the yellow line is almost making a lower low over here. So that is something to keep in mind and at least observe while price is moving towards the downside. If we then finally look at the probabilities of the different scenarios, the different time frames, I should say, then on the medium time frame as it stands now, the probabilities are, from an Elliott Wave point of view, are higher for a continuation to the upside, in this then being a wave 2 or B, before then a move continuation to the upside in a 3 or a wave C. On the low time frame, as the probabilities stand at the moment, the more bearish scenario has a higher probability, meaning we have continuation. I still don't really like this second wave 1 not taking the low of the first wave 1, so I keep it in mind, and I also keep in mind the double top. And as mentioned just now, that if price is going to move towards the upside, first of all, check the CVD divergences. If bullish CVD divergences start appearing with price moving up, and this is starting to take a long time because we want to see a dump, right? If this starts to take a long time, be aware for that double top over here at the highs that we have at 30.4K. So probabilities wise at the moment, bearish scenario, and on the micro, therefore this then being a wave 1. But please remember what I mentioned, what I want to see locally, considering the bullish scenario for the double top or the bearish scenario for continuation. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.